we have discussed the basic concept of common size analysis, and it is that it is a vertical analysis. We take up a financial statement, profit loss, balance sheet, or cash flow statement, and then we compare every value of that statement with a base value. In case of balance sheet, it is the total amount of the balance sheet or total assets or the total investment. When we apply this common size analysis to profit and loss account, here the base value that we take is the sales value or the total sales value. The sales value is then compared, or in other words, we can say that every value of income statement or profit and loss account is compared with the sales value, and it is shown as a percentage of total sales. So the base value in a profit and loss accounts common size analysis is the total sales value, and to convert it to percentage, what we do is that we divide every item, that is cost of goods sold, marketing expenses, administrative expenses, profit before tax, gross profit, extraordinary items, all we divide by sales and multiply it by 100 in order to express them as percentage. If we have a look at this figure where we have got two firms, and on one side we have got a regular profit analysis. Now, if we look at the two firms A and B, it is very difficult for us, if we are looking at this regular profit analysis, whether the profit as compared to revenue is more or less in contrast to firm A, because the total revenue of firm B is not the same as that of the firm A. But when we perform this common size analysis and we express everything as percentage, so when we consider sales as 100%, and then every item of that profit loss account as the percentage of sales, and we show the two statements of two different companies or firms side by side, then it is very easy, very convenient for us to see that which firm or which company is performing better. Now, this is the common size profit and loss accounts analysis. And now you can see that comparing the two, we can see that firm B has a higher percentage of profit, higher margin of profit as compared to firm A. So this is another advantage of performing common size analysis, where you can very easily, very candidly compare two different businesses, two different firms, or two different companies. Now let's have a look at this table, which is actually again a common sized profit and loss account. Here you can see that the sales value is taken as the base value. So this base value is taken as 100%, and now every item will be divided by the base value and multiply by 100 in order to get its percentage value, which means 94 will be divided by 165 multiplied by 100 in order to get this 57% value of cost of goods sold. So cost of goods sold is 57% and gross profit is 43% of sales. एक सेक्टर या एक इंडस्ट्री के अंदर जहां पर एक जैसे बिजनेस होते हैं, तो कंपनीज के ग्रॉस प्रॉफिट्स या कॉस्ट ऑफ गुड्स सोल्ड में बहुत फर्क नहीं होता. The reason is that they're all consuming the same types of raw material, the same type of skilled, unskilled, semi-skilled labor, and the operations or the machinery is almost very much similar. So this is something which is a very good benchmark, that if we see that the cost of goods sold of a particular company which is in the same business is higher than the other ones or the average of the industry, we can very easily see that there is something grossly wrong. और अगर हमारा ग्रॉस प्रॉफिट इंडस्ट्री के, सेक्टर के एवरेज ग्रॉस प्रॉफिट से इन टर्म्स ऑफ परसेंटेज ऑफ सेल्स तब्दील हो रहा है, तो ये भी एक बहुत इंपॉर्टेंट चीज़ है कि जिसे हमें कंसिडर करना है और हमें ये देखना है कि हमारी फर्म, हमारी कंपनी जो है वो बेहतर ग्रॉस प्रॉफिट अर्न क्यों नहीं कर पा रही. When it comes to the operating expenses and profit and taxation, you can see that it is all dependent on the overall structure of a firm or a company. यानी operating expenses में difference हो सकता है. For example, if a company A is doing a lot of marketing activities and the company B is not doing, so the marketing or the selling cost of company A will be much higher than that of the company B. So the percentage of operating expenses might be different. If we compare two companies, this is very much possible, but the gross profit percentage should not be. And again, the final benchmark, which is the profit after tax, and this reflects that what is the percentage of this final profit to the total sales value. अगर आप लोगों को याद है तो ये वो वैल्यू है जिसको हमने प्रॉफिट मार्जिन भी कहा था, यानी प्रॉफिट आफ्टर टैक्स डिवाइडेड बाय सेल्स also gives us the profit margin figure. So profit margin in this case is 14%. यानी कॉमन साइज एनालिसिस हमें बहुत सी ऐसी परसेंटेजेस दे देता है, बहुत सी ऐसी रेशोज कैलकुलेट करके दे देता है जो कि हम अपने ओवरऑल फाइनेंशियल एनालिसिस के अंदर इस्तेमाल करते हैं. यानी हमारे पास यहाँ से ईबिट की परसेंटेज भी आ सकती है, हमारे पास ग्रॉस प्रॉफिट मार्जिन भी आ सकता है, बिफोर टैक्स प्रॉफिट मार्जिन भी आ सकता है, आफ्टर टैक्स प्रॉफिट मार्जिन भी आ सकता है. So common size analysis performed on profit and loss account gives us several ratios, several figures which can then be analyzed and compared to make financial decisions.